I guess it's not a reversal day today. I'll share with you my trades. I mean, nothing to hide there. We'll all have those kind of days. So I was green for like 3 weeks in a row. Yesterday max loss, today is the losing day as well. But again, that's totally fine. Hopefully tomorrow is a new day and it will be better. Let me share with you my trades before we start there. So Oxy, it was popped up on our scanners, the reversal scanner, which I usually watch to catch those reversals at. Extended from the 9 moving average in the 5-minute chart. I broke my rule here. I never go after an engulfing. Actually, after this candle, I could have entered, because at least this looks better with a selling pressure down there. And maybe here I could have added or held more. It didn't give me even my 2 hours, and I exited before my break even. That was small winner, but barely even covering my commissions. Watching it, breaking the high of the day, bouncing off a daily level, doji or an indecision candle, new low, taking it to the short side, 1 hour loser. This trade, I'm totally fine with it. After that, I'm getting in after a fake breakout right there, after this hanging man, taking it to the short side, adding more with the stop loss above this candle right here, this pivot point. And right here, it actually gave me 4.5 hours. 4.5, I partialed nothing because it was so early. If you look at this and the gap to the 9, it had room to go. And it made a new low after a shooting star on the 5-minute chart. So I expected this to actually drop way more. And unfortunately, it got me stopped out. It did drop after that slightly, but again, I wouldn't have partial right here because it was still far from the 9 and the 5. And this was another 1 hour loser right there. So yeah, that's it. Like 2 losers, 1 break even. That's it for me for today. I think I'm done for today. We'll watch tomorrow. There was a good call on Codex at 10:39. This one I didn't pay attention to. It was called at 10:39, somewhere right here. No reversal candles. Finally, good candles right here. Short, and this actually worked out. If I saw this one, I might have taken it, but I didn't. Which means I'll have a red day today. I mean, what made you exit early on the first trade? On the first trade, I exited earlier because first of all, my entry wasn't following my rules. I never go in after engulfings. I usually go after reversal candles, and there was no reversal candle where I entered right there. Not on the 1 and not on the 2-minute chart. And it started holding. You see that it held this level right here, 1704, and it didn't break it. And then it started making a higher low, and then it broke the pivot point below which it was holding. And I knew it either breaks the down pivot 1705 or 1704 and drops down, or breaks this level 1713, 1715 and then goes against me. So I just decided to exit at break even on this trade right here. Otherwise, I would hold it to max loss, similar to what I usually do. If I enter into a trade following my rules, I don't exit unless I respect my max loss or unless it hits my max loss per trade. If I break my rules with entrance, I usually hesitate on holding this one to max loss because I already broke in my rule, and losing because I broke my rule would hurt. I prefer losing following my own rules. Yeah, though it was really tough today. You were looking at it for an ABCD pattern, Jebon? Right here it formed the type 1 ABCD pattern. You see, consolidating all the way till it gets to the 9 and the 5. It's not always getting to the 9 and the 5. Sometimes it's just getting closer to the 9 and the 5 before it shoots higher. It did eventually reverse. I mean, look at this. What happened there? This shooting star wasn't bad right there. This doji right here wasn't bad. But again, it was tough. Like, after it shot here, no reversal candle here, but we are having a double top with a good reversal candle right here. This would have given you the risk to reward and would have went to the 9 to 5, but again, I was done by this moment. Now, let's see what you did, guys. TC. And then we're having Daniel. Chris, what's happening to your network delay? By the way, you can fix this thing. Choose another route or what they are calling it. Let me check what's that. Yeah, got it. The quote server. Change the quote server or switch it and it will get fixed. Guys, do you see my screen here in the chat room? Oh, sorry, in the classroom. Okay, and can you try reloading it? I think it will work then. Okay, perfect. Now let's see what you did, TC. Traded AMD. Let's go from the bigger time frames. On the daily chart, this thing gapped up, I see. Slightly gap up, but still gapped up, right? On the 15-minute chart, it was holding below VWAP. The blue line, I guess it's VWAP, right? No, it's the 20 moving average. VWAP is the red line, but still it was holding below it. Let's see the 5-minute chart. The 5-minute chart, it started squeezing up. It started making higher highs and higher lows on the 5-minute chart. Can't really trade with the 5-minute chart. I mean, you could draw some levels right here. A level above this area right here. And a level down here. A breakout area would make it run at least a little bit to the next level we have on the 5-minute chart. Now let's see on the 1-minute chart. There was a little bit of revenge. That was averaging up. TC, right? So look at these guys. Now this entry, I guess I know what TC wanted to trade here. Rising Devil. I think TC wanted to trade Rising Devil here. Stock which is holding below VWAP, going up to VWAP. You take it to the short side around VWAP. And then you take partials all the way down. It didn't do that. Added to his position at the daily level, and added more, and finally it worked out where TC started taking some partials. Now, do you have a fixed dollar risk, TC? Or fixed loss? Did you hit it when you were adding there? Or you didn't? Okay, and if you hit it, would you exit? Okay, I see that. And do you usually do it, and how often does it work for you? So this wasn't... Yeah, DAS could close you automatically if you add that option on risk controls. But anyway, since it didn't hit your max loss and this is your style of trading, I can't tell you that it's wrong. You were scaling me in on the way up, though I'll be a little bit careful. For me, I personally prefer exiting for a small loss and getting in heavier when it's telling me, and I'll tell you my opinion on this. But again, if this works for you, I just never did it and never tested it and never analyzed my journal for these type of trades. So I can't tell how often it works, and if you are doing this often and it works for you, just continue doing it. But my opinion, this you're getting in quarters, right? Slightly on the way up. Imagine you're getting in here a quarter and then it just goes without you to the downside, giving you your 2 hours. I mean, depending from your entry, 2 hours or 3 hours or 4 hours. This one will be double quarters, right? So almost, or somewhere around half hour right there, right? If you go in heavy and it works out, you will get 2 hours. If you do this and it's going against you and it keeps going against you, you'll lose 1 hour. If it works for you, maybe then when you are already full size, you'll have your average somewhere right here, right? Let's say this is your average somewhere right here, and you'll start making money right after it goes to your average, and your 2 hours will be, I'm not sure, somewhere here, maybe somewhere here. What I do prefer to do, enter, exit at a loss, watch it around the daily level, see it making a new low, enter full size with a new stop loss once it gave me the confirmation or the new low, and then hold on for my 2 hours, 3 hours, or whatever loss right there. But again, this is just my opinion. If this works for you, just continue doing it and let me know how it goes, because we all have our different style, right? So Peter, you're making money on Oxy while I lost on it. Let me see what you did there. Oxy. Mountain pass, reversal, you caught a reversal, right? Yeah, I bet you caught that reversal. Good job, Peter. Good job. So Daniel, let's see what you did here. Traded JPM. Was it on our gap rush list? On the daily chart, it slightly gapped up. Nothing much still on the daily chart because it's trading in a range. I could see that it's making sort of an ABCD pattern on the daily chart. Lower, lower, high, lower, high, lower, high, and finally it's higher. High right there. 15-minute chart. Strong move to the upside. Half engulfed it. Doji, new 15-minute high. 5-minute chart, I see an ABCD pattern. 1-minute chart, an ABCD pattern, and you got sold out. So here it was fine, it was an ABCD pattern. I wouldn't have taken it because this was a parabolic pullback right there, and after parabolic pullbacks I usually wait for a W shape just to confirm that this move isn't actually a reverse ABCD pattern. This is the only thing I would have done extra here because looking at it, strong move, pulling back to view up, holding around view up, making new highs on the 5-minute chart. We're taking it to the long side. Unfortunately, it's getting you sold out. The next thing I would have done here is not tightening my stop loss this much. I know you would have been stopped out anyway, but remember, you took it to the long side in a range, the high of the range, the low of the range. It still didn't break the high of the range, it didn't break this area right here. And you see it's wicking from the upside, which is showing you small selling pressure right there. So basically, I would not really tighten my stop loss for a new 1-minute low. It could have just went slowly down, formed a W shape, and then continued going higher. But this time, it would do that without you. So once getting in a range, my stop loss would be either below the buys or the wicks. Once breaking the range, I could add to my position, hoping that it will go to the high of the day or wherever it wants to go. So yeah, two things. I would wait for a W shape right there, and stop loss would not be that tight. Let's see ZN here, going for bigger time frames as usually. Gapped up, slightly strong bias because I see that it gapped up. 15-minute chart, I see that in the pre-market it was uptrending, not uptrending, but at least it was holding above view up. Right at the open, it's going all the way to the daily level and the pre-market high. It might have been a daily level, I'm not sure, or it could have been a pre-market high right there, but look at this, it's going all the way to the pre-market level and then immediately getting sold off, right? It's getting engulfed and it starts getting sold off. Actually, this would have been a good engulfing crack setup. The confirmation here is the move and the bounce of the daily level and a good 5-minute open range breakdown. What would have made me concerned of taking it to the downside is a bunch of moving average below averages, so I doubt I would have taken it, but looking at it, it would have been decent. I mean, it wouldn't have been the worst trade right there. Now dropping down, you see that it's making sort of a reverse ABCD pattern with a W shape right there. Now remember these guys, for me, but at least for me personally, I love taking ABCD patterns to the long side on stocks which gap up and strong in the daily chart, and I see that AZN is uptrending and it's gapping up today. So I would have preferred waiting for an ABCD pattern to the long side on this thing, not to the short side, or ABCD patterns to the long side or to the short side if they are stuck in a range on the daily chart. Let's say this is the daily chart, it's just stuck in the range. In this case, I don't mind taking it to the long side, and I don't mind taking it to the short side when it's just stuck in a range. Here I wouldn't have taken it for a reverse ABCD pattern despite the weakness intraday, only looking at the daily chart. Still, it was decent, it wasn't bad. You took it to the short side, you had the confirmation candle here, confirmation candle here, and it unfortunately got you stopped out. So yeah, nothing wrong with this trade. Looking at the intraday's charts, only based on the daily chart, I wouldn't have taken it to the long side. You could see that it actually dropped down, look at these guys, all the way to a daily level, right? And intraday, it's strong. Remember what we said, how the market usually trades and how the candles usually behave? it's making higher highs and higher lows, right? Let's say the stock is making higher and higher lows. You can't expect the next candle. You can expect it, but again, it's less likely that the candle will open at the close level and shoot up. It usually, normally would do this. It will open white. It will be red. It will not make a new low. Might go as close as possible to the new low, bounce out of here, and then continue the uptrend. It will either close red with a higher and higher low, a small hammer, or it would close red slightly, not like this. It could close red. Let's say it opened here, went a little bit to the upside, dropped down, and now it will close red, but still with higher highs and higher lows. Or it could just squeeze back up and make a higher high and higher low. This is the same behavior in the daily chart. You see that it's strong. It's making higher highs and higher lows. Now on the daily chart, it's selling off all the way to the low of the candle. It's not making a new low. And then it's immediately getting squeezed back up and maybe closing as a white candle by the end of today. And this is what happened intraday. This price action which you see here is what's happening inside this daily candle. And looking at it bouncing of this daily level and it's strong on the daily chart, I would not really take it for a reverse ABCD pattern for the break of the daily pattern. Because remember, the bigger the time frame, the more likely the setup to work out. Now we're going for a reverse ABCD pattern on a smaller time frame against a strong and a bullish daily chart. So this would have been the reason for me avoiding this trade. And then you could see that it's making higher lows and it's just squeezing back up. I mean, does the gap up or gap down make you long short bias? They give me some sort of bias, but I'm not basing my trade only based on whether it gapped up or gapped down. We're trading the technical indicators, right? Intraday pattern, the 1 minute chart, the 5 minute chart, the 15 minute chart, whatever pattern you are trading. Once you see your setup, when you see the indicators, you could make money on both. Because remember what we said, intraday, it could go down, it could go up, it could do anything, right? But we would get just small bias watching at the daily chart, especially the 2 days ago high and low, the 1 day ago high, yesterday high and low, and 2 days ago high and low. Those levels are really important, and you see that they work a lot, right? Especially those two levels and the previous day close. Those levels I really pay attention to, depending on how the chart looks like. If the stock is just stuck in a range somewhere here, let's say you are trading this candle right here, okay? Now you're having yesterday low, yesterday high, 2 days ago high, and 2 days ago low. Will I really pay attention to those 2 days ago high and 2 days ago low? Not really, because it's just stuck in a range and I see it's making higher highs and higher lows. But when the stock is on a clear uptrend on the daily chart and it's breaking above some sort of levels above some sort of candles, those levels will start making some meaning for me. When it's stuck in a range here, the only levels I will be paying attention to are those: the high of the consolidation and the low of the consolidation. All the rest here, I don't care about them. Yes, Sergio, that could be as well. Okay, so let's go to the next trade. Let's see what Lenny did. Thank you, Mick. Now Lenny traded VXRT, and I guess this was to the short side right there for a 1 minute open range breakdown. Now this wasn't bad. Stock was down, holding below view up, right? The whole pre-market. At the open, it's squeezing all the way to view up. This is where Brian took it to the short side for a rising devil setup, dropping down, closing down there. You're taking it for the break so that you don't get slippage, so that you don't get a bad entry after it's breaking down. And unfortunately, it's starting to go against you, and you are exiting at a half 1 minute candle, and this is not a bad stop loss for 1 minute open range breakouts, breakdowns or breakouts, especially for momentum play. Or you could put it at new high or at view up. At view up, it's like too much. Half candle was good right here. Took it to the short side, it failed. Nothing wrong right there. This happens. Your next trade, you traded KO and I see this one in the pre-market it was holding above VWAP, right? Is sort of long bias, but remember guys, we don't trade based only on what we see in the pre-market or on the daily chart. We just try to put the pieces together and determine the direction of the trend. Now it's holding above VWAP right there. It's dropping down all the way to the daily level, bouncing off the daily level, closing as an indecision candle, making a new high. You're going for a micro play, quick scalp play. On a new high, you're taking it to the long side, starting to partial at the resistance area, which is smart, exiting the rest at break even. Quick scalp play, not bad right here. You analyzed it well, you went for it. I see that the stop loss was small. Now here I would have used this as stop loss, the low of the candle, especially that it went from red to green, or maximum here. I doubt I would have used this candle because of the resistance right there, and if I use this as stop loss, it will not give me the risk to reward and I would simply just avoid it. But yeah, this was really good. I don't think this was bad. Unfortunate that it didn't shoot back up, but yeah, it was good. Now the second trade on KO, I see it's going to the upside, bouncing off a daily level, dropping down, closing as a hammer. I like that. You see it's making higher low wave, another higher low wave. This is just showing you that it is actually strong right there. You're taking it to the long side and you are getting stopped out. Now look at this, you got inside a range, and remember, when you are getting in a range, your stop loss should be the low of the range. The second thing, this was a parabolic pullback, and after parabolic pullbacks I usually wait for W shapes. Once I see a W shape, that would be my confirmation to take to the long side. If I get stopped out after the W shape, that's good, but it's better than getting stopped out once before the W shape and then getting stopped out second time after it gave me my confirmation. This way it will be like two losers right there. My entry right here would have been somewhere here because this was a parabolic pullback on an ABCD pattern. Or if I'm entering early or before the W shape, my stop loss would be the low of the consolidation or the low of the range. Those right here, yes, they are tweezers. What about the pre-market move? Was the move already too much? No, I don't think it was too much. It doesn't look like it was too much. It's not so extended from view up. If it was going straight like some pre-market price actions, I would say yes, but here it was not that much, and then it pulled back actually, which was good. This is not a bad pullback right here, around 50% pullback, and then it's starting the trend, pulling back nicely. Not a bad price action there. So it's not bad to enter inside the range, but when we are using the range, we try to put our stop loss. And what do I mean by range? You see this? It's clear, right? Sorry I didn't draw it. I'm not sure if you guys noticed this or no. You see that this pre-market price action right here is having some candles holding it right here. Because this is the range when I get into the long side, I would put my entry right here. Then you're having the next range right here, which it might bounce off, right? And then pull back. And when I see that there are resistance on the way up, I know that it will pull back. But to prove that this thing is strong, it needs to pull back and make a higher low wave. Now I'm not sure what's the higher low wave or where the higher low wave is going to be. It could go up, pull back, come back up. And in this case, I see that the higher low wave is somewhere right here. I could add to my position, and now instead of using this as my stop loss, I will use this as my stop loss. But again, I'm not sure that this will be my next support or the higher low wave. It could do what it did right here, forming a higher low wave and then coming back up. As long as I'm having a lot of resistance on my head, I am to be expected that it will make a pullback, and I'm not sure how big that pullback is. And to be safe, I use the previous or the best support, I think, which could work when I'm entering inside the range. Tweezers, hammer is one candle I need. Tweezers are two candles. One is red and the second one is the opposite color. It's not necessarily hammer. It could be just two small different body candles. Red candle and then a white candle. It's just two candles in the same range. One is engulfing the other. For range breakout, what's the main indicators that you look at the stock for your watch list? Example, like how to find the best stock for the strategy. So when I'm taking an open range breakout or breakdown, for me personally, I prefer seeing a small pattern on the 1 minute chart, and you could see here a small pattern on the 1 minute chart with a double bottom, right? Then I want to see a stock with no resistance ahead, just to have a really bullish open range breakout, see it pushing somewhere, to see that it will run up with no resistance. So I see that this is the level we're having, and there is no resistance ahead except for small daily levels right there. But anyway, I want to see that, and then I want to see a new 5 minute high right there. If I basically small setup on the 1 minute chart, new 5 minute high, no resistance ahead, or the least amount of resistance I have in my direction. So let's see what else we have there. Ivan. You're welcome. So Ivan, the same trade I've taken, but a better entry than mine. So I took this thing to the short side right here for a parabolic reversal. This thing was called on the scanners. Stock is clearly going up. Stock is clearly extended from the 9 and from view up. It's making a new 1 minute low. This was my entry and this was a bad entry, but here you're entering after a good confirmation candle, taking it to the short side, stop loss up there, and you exited at the same place I actually exited before the break even, right? So yeah, this was a good setup. Unfortunately, it didn't work out for both of us right there. This trade, Ivan? Okay. NIO. On the daily chart, it's either chopping in a range, I guess, right? Or downtrending. I don't really remember. So first trade you have taken was an open range breakout. It looked strong, and you thought it would go for a break of the pre-market level. Break of the pre-market level. What's the pre-market level we have right there? This is the pre-market. Oh, I guess this was the pre-market level you marked right there. So in the pre-market, if I would look at it, we'll have a level somewhere right here. We'll have a level somewhere right here. We'll have a level somewhere right here, right? These would be the levels which we draw in the pre-market. So you went for a break of the pre-market, should have accounted for the fact that 200 moving average was just above. Remember that 200 MA on all time frames is strong resistance. That's true. That's a good note you made for yourself. And I agree. Look at the pre-market price action. The pre-market is weak, right? It's more weak than it's strong. Before the open, it's pulling back all the way to view up. And look at it. It's never closing above view up. It's weakening above view up, but it's closing below view up. Now you are going for an opening range breakout. I guess 3 minute open range breakout or 4 minute, anyway, 2 minute open range breakout, whatever. You are going for an open range breakout against the initial trend and against a strong moving average right there. So yeah, I would have avoided this trade. If this was an open range breakdown to the downside on this candle right here, and I guess Andrew took it to the short side here, right? Like this was the perfect open range breakdown setup. You are going with the direction of the trend, reverse ABCD pattern on, linking the pre-market price action or connecting the pre-market price action with the market open. You are having a reverse ABCD pattern on the 5 minute chart, and you are having, look at this, a fully engulfed candle. Like all those 3 candles, they were engulfed on this candle, and now you are having this support area right here. This is the only thing which is holding you to the next pivot point right there, or right there, taken to the short side all the way down here. Now this was really good if you caught it right there. I guess you took it to the short side on the pullback. Now this is not bad. Red candle, white candle. Now this is scary, right? It's engulfing on the 1 minute chart. But looking at this, it is an engulfing on the 1 minute chart on a reverse ABCD pattern on a bigger time frame. And remember how we said candles are trading, guys? It could go all the way up, not making a new 5 minute high, and then squeeze all the way down, right? It can open here and then sell off, but what mostly happens is that candles, they will trade inside or within the candle. It could go all the way up, and as long as it didn't make a new 5 minute high, it is still good. And now it's starting to push back down. This is the price action on the 5 minute chart. It went down, right? Up. It went up. And now it's coming back down. It's still on a new 5-minute low on a reverse ABCD pattern. You're getting in at the half of the move, putting your stop loss at a technical level. That's a good stop loss. A new 5-minute high is your stop loss, and you are partialing all the way down. This was a well managed trade. I mean, would you be willing to take a reverse ABCDs on this stock, or would you avoid since it gapped up? I wouldn't really go for a reverse ABCD pattern in this case. In this case, I would go for a 5-minute open range breakdown right here, for a 5-minute open range breakdown, but with an entry before the breakdown. I know that the setup is named open range breakout, so you are getting at the breakout, but I prefer getting in before the breakout, anticipating when I have the signals that the stock might break out, just to have a good risk to reward. Otherwise, an entry, pre-market level, low of the day, engulfing candle, or not an engulfing, after a pullback breaking down, going in with the momentum, stop loss half of the candle, and go down. This is the momentum play and the breakout play right there. But I wouldn't go for this one because it's not my style. I probably would have gone for this thing right here. For a reverse ABCD pattern, this is the M shape for you, right? Now let's see what Ralam did. Yes, Ivan. It depends on the directions of the moving averages and the resistance. Yes, it gapped up, right? And I know it gapped up. But look at this. All the moving averages are above it. All the moving averages are above it. Because of the downtrend in the pre-market, it broke the trend. And now it's below the moving averages. If it gapped up, and in the pre-market it was holding above the view up and above the moving averages a bit, and then at the open started breaking down, you'll have bunch of supports below you. In this case, I will not take it to the short side. Not because of the direction of the gap. The direction of the gap just usually determines the direction of the moving averages. Stock could gap up. In the pre-market, it could downtrend, and the moving averages will be adjusted with the direction of the trend. They will be above the price action. In this case, I will take it to the short side. If it's gapping up, it's uptrending in the pre-market, at the open it starts selling off and all the moving averages are below it, bunch of supports are below it, I will not take it to the short side. It all depends on where the moving averages are at and what is the direction of those moving averages. The slope of the moving averages maybe. So Ralam traded mRNA, and I see you try to take it to the long side for a reversal right there. Slightly extended from the 9 and the 5, not extended. I wouldn't get in here for a parabolic reversal actually, but I see that it did 1, 2, 3, 4 candles. And remember guys, why don't I usually go on a 4th continuous candle or a 3rd continuous candle to the downside? Because usually after continuous candles it's making a pullback. After 1 or 2 or 3 candles it's making a pullback. After 1, 2, 3 candles it's making sort of pullback. 1, 2, 3 it's making a pullback. Not all the time, but that happens more often, and because of that I never go into the long side on a 3rd continuous green candle, and I don't go to the short side on a 3rd continuous red candle. So yes, I would expect some sort of pullback, but before taking this pullback or taking this reversal, I would wait for a confirmation candle on the 1-minute chart. And engulfing is never a confirmation for me because the risk to reward gets messed up. This would be the stop loss somewhere below the bodies, and the reward if it goes to view up. And remember guys, the stock is more weak right here, right? It got engulfed. It got sold off, it got engulfed, but the sellers won right here. So what I would expect at this moment right here is the stock making a small pullback and then continuing the downtrend. I'm not sure if it's going to make it to view up or maybe below view up and then continue the downtrend. Looking at this right here, I'll see that this reward is not really favorable and it's not in my favor, and I would just avoid this trade. If we had a reversal candle, maybe a hammer, maybe with something like that with increasing volume or any indicator that it might reverse, I would risk it to the long side, but with a tight stop loss. I need to see a tight stop loss. I see you saw double bottom with the second bottom higher than the first one, so it wasn't the worst trade, it was decent. but I would wait for an extra confirmation. Now it's going to the upside. This is a strong move right there. You see the moving average, which is holding the stock right there. It's giving you an indecision candle after a strong move, and after a strong move, a pullback is to be expected, right? This is the way the market trades. It's never going straight up. It's going up, pulling back, up, pulling back, up, pulling back. So you waited for this pullback moment. You saw an indecision candle below a strong resistance area, which was holding the price action below previously. You're taking it on a new 1 minute low, stop loss above the bodies, and I would go for 2 to 1. I think that was 2 to 1 or slightly above 1 R, which is not bad. And you took a partial right there. I would just take partial, not exit all out. Just to, we want our winners to be bigger than the losers, right? If this was 1 R loser, you want to make the loser and more on your winner. This is what's going to bring us consistency. Other than that, both trades were decent, and I like the second way more. This trade we have went through. Did I miss one of your trades, Ralam? I think I did. Not this one. I think there was another trade. Yep. VXRT. Thank you. So let's see what you did right here. Now look at this. This was a short, I guess. And I usually avoid taking shorts against hammers, right? Remember, it could work out sometimes, but most of the time I don't go to the short side against hammers, and I don't go to the long side against shooting stars. You see, it worked out slightly, but it didn't even break it to the upside. That's why I usually avoid them. Never go to the long side against shooting star, because it has a bigger probability of failing. And you see 2 examples in front of you, right? Fail to the short, fail to the long. 2 failures. Maybe it will work sometimes, but from one stock right here, you see that it's actually failing more than it's working. And that's why I never go to the short side against hammer, because hammer is a reversal candle or a strong candle, and you see it's making a higher low right there. So yeah, this trade I would have avoided. You see a reverse ABCD pattern on the 1 minute chart, but there is a hammer on the 5 minute chart against you, and this would be the third continuous lower low and lower high candle. 2 indicators telling me to avoid this trade. A reverse ABCD pattern against a bigger time frame indicators will not be something I would love to trade against. Now, looking here, it actually squeezed up. It went all the way up. You are having a reversal candle with an increasing volume on the 1 minute chart. You have a shooting star on the 5 minute chart. It's making an ABCD pattern on the 1 minute chart. Would I take it to the long side for an ABCD pattern after this hammer right here? Not really, because of this, with an increasing volume, and because of this. And you see it's working slightly, and then it's just falling down. Now look at this. What are you doing? You're getting into the long side, and I know what step you wanted to get in there. View up bounce, right? Set up. It's going to view up. It's holding it for 2 minutes, and you decide to get into the long side. But look at this. It's clearly bleeding right there. Lower lows and lower highs on the 5 minute chart. I recommend not trying to go against the trend unless it's giving you a setup. I would go into the long side here if it started going way extended from the 9 on the 5, and when I see that the pullback is to be expected, I would take it to the long side all the way to the 9 on the 5. Now here it's breaking 3 of my rules, right? First of all, it's clearly downtrending, lower lows and lower highs. Second thing, going into the long side against the 9 moving average on the 5 minute chart. And finally, not even a new 1 minute high or a reversal candle on the 1 minute chart. Like clearly everything is telling us to avoid this trade, and that's why I would personally try to avoid this trade right there. You're welcome, and good job stopping out, Ralam. The most important thing is to respect your stop losses. The rest will come slowly, step by step, right? Now let's see what J-Bone did there. Traded a pennant. You started trading a lot of pennants, by the way, J-Bone. Indicators. Stock gapped up on the day, but not too much, only 1.5%. So that was a strong indicator. And remember, guys, we don't trade only based on gaps, right? Look at this. This is how we do that. We put all the pieces together, and then we execute the trade. Now, it was above all the moving averages and view up. So it gapped up. It was above all the moving averages and it was above view up as well. And it closed as a hammer on the 5-minute chart. See guys, 3 indicators. Gapped up, gave him a strong bias right there. It was above all the moving averages and view up, second indicator. It closed as a hammer on the 5-minute chart, third indicator right there. Is it a setup? Yes, it's setup. It's making higher lows, higher lows, higher lows on the 5-minute chart. At the same time, it's making lower highs, lower highs, lower highs. It's forming a pennant. After the pennant is broken, it could go either to the long side if it breaks to the upside or to the short side if it's breaking down. Entered at the hammer on the 5-minute chart. Short, failed break and sold off with volume. So we saw that actually failed the breakout right there. See, he took it to the long side, it got him stopped out, and he saw that the breakdown was slightly with increasing volume, not too much, but in average it was bigger than the previous candles, and he flipped the position to the downside. Unfortunately, both of the positions got him stopped out. Wanted to get 3 to 1, but didn't get in there. Now, how I usually trade those breakouts or pennants, yeah, it was choppy unfortunately. Like the setups weren't bad. The confirmation here was good. It wasn't so tight in range yet, but the confirmation on the 5-minute chart, it was there. On the 1-minute chart, there was no confirmation, right? Usually what I love to do is I want to see a setup on the 5-minute chart and a confirmation or entry candle on the 1-minute chart, and I couldn't see that right there. So I would have avoided the first entry. Like the second entry, it's good because it's so obviously breaking down, but it's then failing out. What I usually do in these type of trades is I wait for them to break to one of the two directions and then bring or make a pullback right there. Or I use a stop loss inside the range of the pennant, because we could assume that this was the pennant right here. What it could do after that is make a higher low similar to what it did right there, and the pennant now will be something like that, or maybe something like that, right? Like we draw it right there, and now it could be like this. It's tough to tell because we don't know what's going to happen after that. It's a pennant right here, but then it's a pennant right here. So my stop loss is not the tighter range inside the pennant. I use the waves. If I'm taking it to the long side here, my stop loss would be somewhere below this wave or somewhere below this right here. If it's getting me stopped out, then that's it. If I'm taking it to the short side, for example, what's my stop loss? I see that this is actually an obvious resistance area right here. I would say that this would be my stop loss. So my entry is the break of the pennant as confirmation, but my stop loss is not the range of the pennant, is not the triangle itself. My stop loss is the technical horizontal level I have right there. But again, yeah, not bad. It was just choppy. I'm glad I actually stayed away from it today. Still, I was caught in another chop. So then let's see your two trades. You traded NIO, took it to the long side, short based on the tape and the volume. So this was a long, then this was a short, right? Got out when the tape did not cooperate, added to the short side, and started partially back down. And you have indicated that you use hard stop loss. How do you enter it quickly? Do you have hotkeys? Like, yeah, I use Cal hotkeys. Okay, see, so you took NIO to the long side and it unfortunately didn't break up. Then you flipped it to the short side, and I think the short side was a smart play. Why is that? We already talked about this one. I will not go in too much detail. It was more weak in the pre-market, pulled back to view up, fake breakout, and started coming back down. Now this wasn't a bad short right there, and along with that, the confirmation for an early entry was the time and sales and the volume. That's why I then took it to the short side. This was a good add to the short side. You see it's dropping down, pulling back, still holding right there, making a new low. This is the smart play. You don't go in on the way up, You wait for the new low as confirmation. I love this the most. This candle was also a good confirmation candle right there, and then you partial all the way down. So yeah, this all was really good. Now got out when the tape didn't move. Okay, that I saw. Yeah, this was a 1 minute upper range breakout. But again, I don't really love taking 1 minute upper range breakouts against the moving averages and against the overall trend, because it just stuck below a bunch of resistance area. I love taking them with the direction of the trend and the direction of the clear path. Now let's see what you did here. You traded SPCE. Candles are a little bit small. A lot of levels you have right there, but yeah, it's fine. So you traded SPCE. You took it twice share size by mistake and got back to normal size with the first partial. So you clicked the hotkey guess by mistake 2 times. You had double share size that made you nervous, and you partialed half to just get back to your normal size, and that's totally fine. That's smart. Then you took 20% partial right there, half day partials, added there, and partials based on the tape. Now let's look at the 5 minute chart first. So on the 5 minute chart on SPCE, I see it's uptrending in the pre-market. This is bad. This is big. It's slowly uptrending in the pre-market, going sideways around the pre-market, around V up. Now look at this. This is the type of price action where I can't really tell whether the stock is going to be a long or short. Yes, it started out so strong right here. This is not the pre-market. This is the market open. I'm sorry, guys. It started up strong, but then it just going sideways. You see, it's chopping around V up and down. Yes, definitely more long bias than short bias. Why is that? Because it broke VWAP up, it couldn't downtrend below VWAP up, and it came back up above VWAP up. So looking at this, yes, I'll be a little bit more long biased. I see an ABCD pattern with a 50% pullback. It's breaking VWAP up, making higher highs and higher lows, and then you are getting into the long side on a new 5 minute high. A little bit of early partials, but I think that's totally normal in this type of stock. Looking at how it was trading the past hour right there, or past half an hour, I see that it's not really moving, so it's not bad to take partials at your risk to reward levels. You add it to your position because it started breaking the high of the day, partial at the break of the high of the day. Now this add right here, I wouldn't have done it. Why is that? Look at this. It's been going in a range for around 1 hour. Finally, after 1 hour, it's breaking the high of the day, but this breakout is not really strong. I don't know, 30 cents, 40 cents, 20 cents, I'm not sure how many is that, but this break of the high of the day, it's not really strong. On a pullback, I will not be really interested in adding, because this is actually a weak sign. This is showing me that we had a fake breakout. We have a double top setup with a fake breakout to the upside. Now it's getting back down into the range. Yeah, I wouldn't have added right there. I would have just simply avoided it. If the breakout was stronger and it made some move after the breakout and then pulled back into the previous resistance, that would be a smart place to add. But after this small breakout, I would have just avoided that. Other than that, you managed all the trades really well. T-chart, let's see what you did there. And then we're having Mu'in. You're welcome, Zen, and good job. So T-chart traded work. I see work, it dropped down a lot. It got extended from the 9 moving average in the 5 minute chart. Reversal candle on the 2 minute chart. You are taking it to the long side. We also had a fake breakdown, actually. Small reverse ABCD pattern on the 1 minute chart with a fake breakdown. Little bit of a late entry. Better entry would have been right at the new 2 minute high, remember? If you can do that. If it was fast and you got slippage, that's fine. But if it gave you a chance to enter earlier, it's better to do that, because each 5 cents is important right here. If you get an entry at 55 with a stop loss at 50, you'll have 5 cents stop loss, and right here at 70, you'll have 3 Rs, right? If you get a late entry, like at 60, your stop loss at 50, at 70 you're having only 1 R. You see the difference? Looks like only 5 cents, but these 5 cents ruin the risk to reward. Now at 70 it's 1 R, while it could have been somewhere around 3 Rs. So the entry was good, the setup was valid, it didn't work out, and it got you stopped out. That's totally fine. I wouldn't have held for my original stop loss right here. Why is that? I'm having a W shape, I'm having a reversal candle, and it's making new lows. Yes, it would have been still loser, small loser, but no need to hold it to your original stop loss. It's either going up immediately or it's making a double bottom and then working out. If it's starting to make new lows after the double bottom, it means it started descending, and a descending triangle even on the 1 minute chart means that most likely it's going to break down. I wouldn't take this descending triangle to the downside. Why is that? It's extended from the 9 and the 5. I will expect it to break out, and most likely it did break out. I'm not sure, but it could have broke down. But I'm not sure how much it's going to run after the breakdown. It could make small fake breakdown and then spike all the way back up. Okay, it spiked up. That's why it did that. That's why your entry was bad. But yeah, it's totally fine. Now here I would have exited earlier. Even if it works out after I exit earlier, I'll not be mad about it because this is one of my rules to exit earlier. What I like right here, look at this. Increasing volume, the reversal candle, daily level, new high. It's the A plus reversal I love. Unfortunately, it didn't work out, but this is an A plus reversal for me. And you're having 200 moving average in the 15-minute chart. I didn't pay attention to that. So this was totally fine. Adham, what did you do right there? Traded Microsoft. So let's see what you did in Microsoft. Now look at this. This is a trade I would have avoided. Only looking at the 5-minute chart. 1, 2, 3. Third continuous candle. And after I see third continuous 5-minute candle, a pullback is to be expected. And only looking at the 5-minute chart, I will avoid this trade. I know there is an ABCD pattern above view up on the 1-minute chart. You have an ABCD pattern above view up. You are having a hammer right there. You are taking it to the long side. But look at this, it's just immediately going against you. So looking only at the 5-minute chart, I personally would have avoided this trade. A pullback is to be expected. But I'll tell you another reason why I wouldn't take it. It's mostly weak than strong, right? It could be forming a reverse ABCD pattern. Bunch of moving averages ahead, which is why I wouldn't really like it to the long side. I'm definitely going to like it more to the downside. Sajid traded NIO. Now this is good. This is trade similar to Andrew's trade. Stock was, we watched this previously. Unfortunately, the 5-minute chart isn't here, but we saw that NIO, it was downtrending, pulled back, closed below view up, started making new lows. You take it on a new 1-minute low after this single thing, right? You're going with the direction of the trend. All the moving averages are above it. It's a 5 or 4-minute open range breakdown. This is open range breakdown setup. Taking it to the short side and starting partially all the way down. Confirmation candle for a reverse ABCD pattern with the trend. Taking it after this reverse hammer to the downside. This is really smart. And then partialing all the way down. Both of them were amazing trades, Sajid. Good job, and good job managing them. One note, too many partials, right? One thing to work on for all of us is holding to our winner trades. The first partial, I would say it's normal because you partialed at the low of the day. You are afraid it might form a double bottom right there. I mean, that's fine. But after it's breaking down, it's better to be patient. Wait for the momentum, wait for the time and sales, wait to see how the candle is resisting. Is it going with a decent speed to the downside, like 1 tick to the upside, 2 ticks to the downside, 2 ticks to the upside, 3 ticks to the downside? If I see that, I see that it's more weak. Or you see that it's actually starting to hold, going up, holding, going up, holding, going up, holding. Like in this case, yeah, you definitely need to take some partials because you see that it's actually holding. So yeah, that's it, guys. Do you have any questions? I mean, quick question in the Harami combo, the second candle. Oh man, I missed your trade. I actually thought I went through it. Okay, my bad. Let's go here, guys. Thank you, man. And guys, if I miss any trade, make sure to tell me, because I guess I'm bad at this sometimes. Now, this setup we talked about, remember, guys, a 5-minute open range breakout. We did this example when I think Mick asked about the criteria for the open range break up. Now, a stock which is gapping up, which is holding above most of the moving averages and view up in the pre-market. At the open, it's forming a setup on the 1-minute chart, which is a double bottom right there. And it's making a 5-minute opening range breakout. This is exactly what we talked about, right? Now we are taking it to the long side right here and partialing all the way up, which is decent stuff. This was good. This is exactly what we talked about, and this was the example we talked about, and I didn't know that we had actually someone who had traded this thing here. You have daily level right here. So maybe your partial right here was smart. It was daily level, it was pre-market high. I would have done the same thing. You are having another daily level, so your partial, the second partial at the daily level. And I guess that was your last exit, maybe because you hit your risk to reward. But I personally would have left something to run, because I see that it's breaking the pre-market level. It was gapping up, it was strong in the pre-market. It's making an ABCD pattern. I honestly would have expected it to run way more, but this thing turned out to be chopping eventually, which was sad. But maybe other stock on other day will run way more than this. I mean, can you clarify on that point you made about 2 successive green candles on the 5-minute chart? If there are 2 green candles, 5-minute candles, you will not take the long on the third. You always wait for pullback first. Yeah, Ivan. So basically, if I have one, yeah, something like this, 1, 2, 3, I'm never going to the long side on the third candle, right? 1, 2, 3, never going to the short side on the third candle. 1, 2, 3, never going to the long side on a white candle. I do that sometimes if I'm having a 3-bar setup. Huge bar, 1 minute, huge 5-minute candle. Inside it, a 5-minute candle, at which I see that it's making a clearly strong move and then a new high. This case I would take it because this is a setup, this is 3-bar setup. But other than that, I try to avoid taking stocks to the long side on a third consecutive 5-minute candle. The second one, the first one is the best. Second one, slightly chasing. Third is just too much. Why do I mean that? Look at this. It's going up, right? In this case, just getting extended from the 9-moving average in the 5-minute chart. If I see a reversal candle here on the top, and I'm getting an entry on the 1-minute chart somewhere here on the top, that's the best entry I could get. If I'm late on it, and I'm getting on the second 5-minute candle based on a setup on the 1-minute chart somewhere inside it, then it's totally fine. I mean, it's normal. Like, it's not the best entry I would want to get, but at least it's still good. It's like the second. It's a confirmation candle on the 5-minute chart. Third candle is the chasing. You miss the 1-minute chart entry, you miss the setup on the 5-minute chart, and you're getting way too late. And when you're entering late, you will not have a good technical stop loss. You either will put your stop loss at a 5-minute high, and this is not technical stop loss, right? This is the range, the low of the range, the high of the range. And it could simply make a lower high and then continue drop down. Or it could continue making lower highs and then drop down. So your stop loss in this case, like the best stop loss, is the high of the range or slightly below the range in case you're hoping it will make a lower high and drop down. Now this is a bad risk to reward, right? This is so big of a stop and your reward will be 2 hours, which is way down there. This is why the third candle is the worst for me. I could expect it to run. Most probably if it's strong or if it's weak, it will continue running. But again, the risk to reward isn't there, and we need technical stop losses, and the third candle is just chasing. I just usually avoid it. How do you enter an evening star or morning star for reversal? I use the 1-minute chart Rami on these things. If I see stock extended from the 9-moving average in the 5-minute chart, like in this case, now let's say on the 1-minute chart, ignore this, you're having a wide bar 1-minute candle, then you're having a small 1-minute candle, and then in your low, I would take it to the short side. This is the evening star. It's a reversal candle on the 1-minute chart. But remember, you're not entering based only on an evening star. You see a setup, a parabolic reversal, which is extended from the 9 and the 5. You see an entry on the 1-minute chart, an evening star. Or maybe you see a reversal candle on the 15-minute chart and an evening star. This is the evening star right here. This is actually an evening star, yeah. Wide bar candle, small bar candle, and a new low on the 5-minute chart. I might be a bit confused. If you have some time left, could you perhaps clarify a bit on the Harami combo? So Lenny, the Harami candles, it's similar to reversal candles. You might be watching an ABCD pattern on the 5-minute chart, a pullback on the 5-minute chart, then you're having a big white candle, let's say big red candle. Inside it, a white candle which opened not at the low, it opened slightly above the low. Okay? And then it closed something like this. This is the Harami candle. On a new high, you are getting into the long side. But again, this is a candle, right? This is a confirmation. It's not something to trade alone with. You see an ABCD pattern on the 5-minute chart, then you see the Harami candle at the low of the pullback, and you're getting into the long side on a new 1-minute high. You see a setup on the 5-minute chart. This is the 5-minute chart. Then you see an entry inside the 5-minute candle, but based on the 1-minute chart. This is how we try to get good entries. if you have time, how will you play breakouts of pre-market levels at the open? For example, if there is a pre-market high or daily level that stock has been pumping against in the pre-market, will you buy as soon as it breaks above it, even in the first minute? Even now, that depends. You're having a pre-market level right here, okay? Let's say stock opened right here and it's going up, and it's breaking it. I'm not playing this type of breakout steps because it already did the move, most of the move before the pre-market breakout level. If the stock opens right here, let's say it's going sideways, sideways, sideways. Now the market opens, this is the first minute and it's breaking up. This is not a huge move, right? It broke the pre-market level on the first minute, it broke the resistance. This is a tight stop loss right there. I might take it for a pre-market breakout level. Now let's say the stock opened here, it started making higher low waves right there, higher low waves, higher low waves, and now it's breaking the pre-market level. I would take this right there because I'm having a clearly defined stop loss. I want to have a small move before the breakout. You don't want stock to start taking rest after the breakout, okay? If the stock did most of the move before the breakout and then it's breaking out, it will be exhausted. It was going higher and higher and higher and higher, and now it's breaking up and there is no more power to continue going higher. It needs to pull back. And if I take it to the long side here, it will break the pre-market high level and then it might continue. You know what's my stop loss when I took the breakout? I need a technical stop loss. Down there it's too much. Somewhere down here I can't make up a stop loss. If a stock is opening here and then it's breaking out and I'm taking it to the long side, that's good because this is the beginning of the move. It still has room to shoot up higher. There will be people who are getting in at the breakout and continuing to push it higher. People who get in here and then it's going up and breaking out, they will start taking partials right here. It will make the stock heavy. It will not give it enough power to continue going higher. People who got into the long side on a stock which opened here and the level is there, who got in here, they will not partial at this level. This is a small move. They will wait for those people who are entering at the breakout to push the price higher and then they will take partials together. Yes, Lenny, that's it. In this trade, if I get into the long side, my stop loss would be, I'm not really sure, it would be somewhere around view up, just half candle. Because it's a 5-minute open range breakout, it's half candle on the 5-minute chart, and I see that on the half candle we're having view up, we're having a hammer. Most of the time after hammers, you could put stop loss either at the low of the body or so tight at the range of the body, which is so risky, but it works still. And here we have multiple setups combined together. So yeah, that's it guys. We're over time here. Thor will be in the chat room there. In the next trade review session, it will be on Thursday, 12 p.m. Eastern. If you still have any questions, you can email me, ayman@beattabletraders.com. Don't overtrade. If it's a losing day, I had one yesterday, it's a losing day today, that happens to everyone. You will definitely get back to your green streaks. Just respect your max loss days. Don't turn a small losing day into a big losing day which will eat up the profits of weeks and weeks or maybe months. So yeah, that's it guys. Have a good day. Bye bye.